Mark, your view this morning, don't fight the tape.
Absolutely. I do not understand people who are trying to turn this tariff headline and the uncertainty that surrounds it into an argument to be bearish in the short term. I think that this kind of federal court ruling that Trump's tariffs are illegal and that they'll have to be paused, they've been given 10 days to effectuate the order. I think this is, it's uncertain what this ultimately means. And it doesn't change the long-term story, which is US stock underperformance, which is set to sustain for the coming years. It's been valid for the last 4 or 5 months. It'll continue to be valid. People will want to cut their exposure to the dollar. That remains valid. US Treasuries are likely to have a difficult year ahead as people get worried about the sustainability of US debt situation. None of those things are changed by that story. But that doesn't mean that in the short term you fight the bullish momentum. And the reason is the single biggest theme of this year has been Trump's trade wars. That's been the single biggest negative that US stocks have been largely overcoming to some extent. So given that theme has taken a big block from this ruling, a big knock, I should say, even if we don't know what happens, this is not the time to be proactively bearish. So I think that US stocks underperformance will remain valid, but that does not mean you be bearish on US stocks in the short term.
What do you be bearish on in the short term?
It's a good question, Kriti. I think, first of all, right now, I think it's going to be, I think the technicals for bonds has got a little bit more supportive after a sell-off in the very short term. But I think it's hard to be very constructive on bonds right here, given that the underlying story is very negative, as we see increasing term premium priced in, increasing concern about debt loads. And then suddenly we get this news flow, which is positive for growth. So therefore, that should boost the inflation story. We might also got the end of the disinflation cycle on the US side, which means there might be more upward pressure on the Fed story as well. So I think, if anything, I'd be bearish still on bonds overall, even though the short-term indicators suggest they might have a little bit more of upside in the very short term. Otherwise, longer term, I remain bearish the dollar, absolutely, and I think that's very, very valid. I just think short term, this is not the time to get excited on that view.
What do you make of the Cameron Cries perpetual motion story? Like, basically, he's saying that at some point stocks cannot continue to be this positive in the long term. There's too much resistance in the machine to keep them going. Is that a medium-term story in 30 seconds, or is that something that I need to think about in the long term?
I think it is medium-term. So I am someone who is actually pretty bullish global stocks. I think that the next year will be very difficult for US stocks. I'm surprised they've already rallied so much in the last couple of weeks, even though I expected some sort of relief rally. I think the overall story is that perpetual motion of US stocks will be disrupted. So I think it's a valid story for the next 6 months, not just longer term, but it's not a particularly bearish story. It's just more volatility ahead.
But does that volatility, I'm just kind of curious, where is the vol risk the largest? Is it in the equity market, or is it in the long end of the bond market? For macro investors that are trying to maybe zero in on one asset class or the other, what should they be more worried about?
Yeah, I am much more worried about a breaking moment happening in both the dollar and in treasuries than I am in stocks. I think that US stocks are expensive, but they're not a broken story. The US stock market still produces a lot of profits every year, and that compounds at a very good level. So I think it's very, very hard to be particularly bearish US stocks, even if you think they're expensive. So that's why I kind of phrase it much more as US stocks underperformance, not about an outright bearish view. I am worried that volatility translates to a sudden breaking moment at some point in treasuries and in the dollar. Now, I don't think we're close to either of those breaking moments, but I think that both of them are likely later on this year. So I think it's potentially a 2025 story where we get a short-term, really severe scare in treasuries and likewise in the dollar.